improves, will the safe haven asset retain its shine? With me to discuss is Jan Nieuwenhuijs from Amsterdam, who joins us from Voima Gold as a gold analyst. Jan, great to chat to you. Now, you tweeted today about this piece from JP Morgan, essentially talking about this surge in gold and how it's connected to eroding confidence around central banks. So, can you talk to us a bit about the connection between gold and what we've been seeing in terms of this major monetary stimulus around the world from central banks?
Yeah, of course. I think the elephant in the room is debt, global debt to GDP. So even before the Corona crisis, debt levels on a relative basis were at record highs. Global debt to GDP was 322% of GDP, and then came the Corona crisis. And more debt was needed for sovereigns and also for companies, of course. So, and all this debt is kind of unsustainable. So, central banks around the world are buying all this debt, and yeah, because in without the central bank, the debt will be unsustainable. Normal investors wouldn't buy it, but you know, for quite some years now, they have been seduced by central banks to step in and keep buying bonds. But it's very likely that at some point the market thinks, well, this is becoming a bit ridiculous, and we don't believe this system anymore. Central banks are creating so much currency, buying so much assets. We need to get out, and I think that is very bullish for gold.
All right. Now, recently we've seen this rally in risk assets after that major sell off that started in February. Yet at the same time, we've also seen safe havens like gold stage impressive gains as well. Normally, those two don't go hand in hand. How is that sustainable? And do you think something's got to give? And if so, what will it be?
Yeah, I think something is going to give. Strangely, I'm not an equity specialist, but I think a lot of retail investment has flown into the stock market. They thought, oh well, this is maybe a once in a lifetime opportunity because the prices went down so fast, and they thought, well, let's step in and buy. You also saw a lot of new subscriptions on online brokers such as Robinhood and others. So I don't think a lot of the smart money is into the stock market at the moment. It can be mainly retail investors, and I don't think this rally in equities is sustainable. It will probably, I mean, in my mind, we're heading into a very severe depression. So I don't see the stock markets keeping up.
Okay, so if we're heading into a severe depression, presumably that's going to be very bullish for gold. I mean, we've already had major gains for gold in recent months. Do you think this could continue? What kind of levels do you think we should be looking at on the upside?
Well, I think my outlook is fairly simple. I think in a short term, let's say 3 to 4 months, it can be very volatile, and gold can also pull back because there are a lot of deflationary forces now because of the depression is unraveling. So it could even pull back to, let's say, 1500 or maybe even lower. I don't know. It's very uncertain. But if you look at like long term, like 4 months and beyond, what I just mentioned, the debt levels, they can only be lowered through two things in my mind, and that is debt restructuring and inflation, and both is bullish for gold. I looked it up just before the show, and gold at the moment makes up about 0.5% of all global financial assets. So I think there is plenty of upside for gold, and it could easily, let's say, reach $2,500 by the end of next year.
Yeah, I mean, it's interesting what you're saying about inflation. Obviously, gold is always used as a hedge against rising price levels. And there are a lot of concerns about there that we could enter into this sort of Japan style long term deflation. You're saying, from what I understand, that we're going to enter a sort of short term period of weakening prices, but then inflation is likely to pick up. Is that your view?
Yeah, that's most likely, I think, and because there are very deflationary forces. But if you have so much debt in the world, central banks cannot tolerate deflation, because deflation would mean that for people that are in debt, the debt burden goes up. So they will have to stimulate inflation. And if you look at the Fed's balance sheet in recent weeks, they are really committed to print whatever is needed to get inflation. And also, if you look at central banks have taken in so much assets on their balance sheet, and they can suffer losses too. Now, one solution for central banks would be to print money and buy gold to make the gold price higher. Then the gold on the asset side of their balance sheet would rise in price and would make up for the losses on other assets. So they really want inflation. They wanted it, after 2009 and 2010. They didn't get it, but they will try harder.
Okay, so where do you stand on gold versus silver? Is the ratio something that you pay close attention to? And for an investor who's looking to find safe, sort of a safety asset like gold or like silver, some people think silver's a better bet because it tends to magnify gains and magnify losses. It's a bit more volatile, and of course, it has those industrial uses as well.
Yeah, well, I don't really pay a lot of attention to silver, to be honest. I'm more focused on gold, also because if you
Yeah.
look now at central banks or institutional investors, they are all into gold. Nobody, there's no central bank that I'm aware of that has silver in its vault. Also, if I zoom out thousands of years, 3,000 years before Christ, silver was more valuable than gold. And now the gold silver ratio is 100. And it's because the market has decided that gold is superior. It's more scarce, it doesn't corrode. And throughout history, gold has often been a store of value and silver a medium of exchange because it was, you can't go to the bakery with a gold coin, it's too expensive. So they needed silver as a medium of exchange, but we don't need it anymore. So silver has lost its monetary purpose a little bit. If you look at the last, say, 50 years, silver has always gone up together with gold, albeit with a lag and with more amplitude. So I think silver is also going to go up. But I don't think the current international monetary system is sustainable, and we're heading towards a new system. And it's quite likely that we'll need a new anchor, and that anchor will be gold and not silver. So silver is a bit more speculative, and gold is really the ultimate store of value.
Okay, so is a lot of your sort of outlook for gold based on sort of speculation rather than fundamental supply and demand? Because I get the speculation argument, but when we think about the demand side, the fact that, as you say, we could be heading into a global depression, we know China and India, some of the countries that have major stores of demand when it comes to gold. Do you see that pulling back? Could that be a dampening force on the outlook for gold prices?
No, it's very normal if the gold price rises that demand in the East collapses, and even the East will dishoard gold. So they're already selling. China is already selling gold to the West. This is a pattern. I've written an article about it. This is a pattern I call the West-East ebb and flood of gold. Gold is not a commodity, so it doesn't make sense to look at the supply and demand balance of gold and think about mine supply and consumer demand. Gold is a currency, so it's about the trade in above stock metal. And all in the last 80 years, every time the gold price went up, it was the West buying. A lot of above ground gold is flowing from the East to the West. And if the price peaks or goes down again, above ground gold flows from the West to the East again. So it's absolutely not bearish to see demand in the East collapsing. It's very, very normal for a bull market, actually.
Yeah, and I'm just wondering if you think there's any correlation between gold and cryptocurrencies. We know that sometimes they're referred to as digital gold, and Bitcoin has done quite well as well amid the coronavirus pandemic crisis, although it has sort of come off heavily recently. I mean, is there a risk that gold could go as well?
Sorry, is there a risk that
Is
what
there a
was
risk
your
that gold
question?
could
That
suffer
is it
some
about
of the
Bitcoin?
difficulties that Bitcoin has recently suffered? Do you believe that there's any kind of link between cryptocurrencies, particularly Bitcoin and gold? And given the fact that we've seen Bitcoin come off, do you think that we could see some selling in gold as well?
No, no, I don't think those are correlated. I mean, gold has been a store of value for thousands of years. It's in our language. It's in if you win a medal with the Olympics, it's gold. It has a long. It's in our DNA, and Bitcoin is very new, and it came up as well. I think because it's a great invention, and it's a bottom-up invention. But I don't think that is a threat to gold or a precursor.
All right, Jan, thank you so much for joining us. Thank you so much for your time.
Okay, thank you very much.
And that was Jan Nieuwenhuijs, gold analyst at Voima Gold. I'm Victoria Scholar, and thanks so much for watching IGTV.